Up there now. Okay, well, good morning, everyone, and welcome to Canoe Scale series. Your content, it's sharing the PowerPoint, but not the presentation there.
Yeah,
Um, Kira?
there.
Yeah,
That okay now?
perfect, great. Thank you. Yes. So this is our second session in our Build and Scale webinar series. And this morning it is the bookkeeping solutions that every growing business needs. So you're joined this morning by Kira McFeely, who's our head of cloud services. And my name is Christina McGreevy. I am the head of business support services. So we support a lot of businesses with outsourcing their finance function, outsourcing bookkeeping, payroll, management accounts, as well as supporting clients transitioning to a new accountant. So first of all, I'll just explain a little about Canor. We're a firm of over 80 staff specializing in offering compliance and business support services, outsourced bookkeeping, payroll, and management accounts. We're a multi-award winning online accountancy and company secretarial firm supporting SMEs across Ireland, Northern Ireland, and the UK. So I'll hand over to Kira now that'll be going through the bookkeeping fixes that you need. And we have on the slide here what we'll cover today are your systems working together. Is poor setup quietly costing you? What happens when growth outpaces your bookkeeping? And what are your books actually telling you? So over to you, Kira.
Okay, Grant. I'm just going to stop sharing again then for hopping off.
Yeah, absolutely.
Give me 2 minutes. So, there, stop sharing.
I
There we
should
go.
add, while Kira's getting set up there, that the webinar today is mainly for general information purposes. However, Kira's happy to field questions and we will go through some case studies as well. So you should leave with some really good takeaways and actions that you can take to improve your processes. But do please use the chat function and the Q&A function and pose any questions, and I'm happy to put them to Kira on your behalf.
Right, amazing. Thank you, Christina. So, and
Thank
welcome everybody. Yesterday, I watched back the Smart Tax Strategies webinar that Christina and Tom did, and they actually discussed a little bit about pre-year-end tax prep, something that every business really needs to be doing. And the one thing I guess that I took away from that is it's only really possible if you have the right infrastructure around your financials. You know, you need that information to be able to make those key decisions. So today we're going to look at how setting up your systems right can be a real game changer for that kind of planning and forward thinking. All right. The first topic we're going to go through is really about your system setup. This is one of those areas where business automatically think, oh, if everything's fine, until it really isn't. What we tend to find is that actually most of the issues don't come from the people doing the bookkeeping; they come from the systems that they're using. So, are your systems actually working together? Is really the question we want to answer. A lot of businesses have built up their systems over time, you know, a bit of software here, maybe a tool there, and before they know it, they've all these systems in place, but nothing really speaks to each other. Business owners don't realize the inefficiencies that are happening until so much time has passed, and there's a lot of data in there that then, you know, the damage is done, needs to be corrected. You end up with things like, you know, manual exports, rekeying data, reconciling things that really should be reconciling themselves, spending hours and hours month end fixing issues that shouldn't exist in the first place. Gone are the days, we talked about this yesterday, gone are the days of printing your bank statements with your ruler and highlighter and sitting there and reconciling things off, or at least those days should be gone. You know, if you find that your team are still doing that, you might want to start questioning how your systems are set up, you know.
you.
Now, on a positive note, there are some really great systems on the market that really stand out that manage finances in a really, really fantastic way. Xero is a great example of a system that is known for its volume and variety of integrations that are available. You can have anything from, you know, a point of sale system or stock management, payment platform, CRM, those kind of tools that integrate really well with that finance system. But chances are, if there's a cloud system out there, Xero probably connects with it, or there's something somewhere, you know. We're going to touch on a few integrations later on after their case studies, a few examples of softwares that work really well together. The important thing to mention here is that integrations only really work well whenever the setup is done right. Bad integration is almost worse than no integration at all, actually, because you're relying on information there and it might not be reliable. So when we talk about systems that are working together, we're not just talking about connecting one thing with another, just plugging something in. We're talking about really making sure that that data flows in a really clean and consistent way that supports the business and provides that information. Um, It's all down to the connection and the setup, the original setup. Uh, so what you really need to ask yourself is that per setup costing your business money? And the chances are the answer is yes. So there could be gaps in your configuration. And what I'm talking about there is really, like missed supplier defaults, wrong nominal codes, wrong VAT coding. If you think about the transactions that every single time need a manual input, that's what I'm talking about when I'm saying configuration isn't right. All that adds up to massive time drain. So if you think about you're paying your staff to do this type of work, it's costing your business money. Now, one of the biggest misconceptions that we talk about on a regular basis with clients is that idea that they think automatically moving to cloud software will improve their bookkeeping quality, and that's not the reality. Um, Actually, the setup is the most important part, and if it's not set up right, that can make things much worse. What you end up doing is you actually end up finding that your mistakes are faster rather than having a better process. Um, Having that misaligned setup isn't the worst thing in the world, though. It's not it's not an end all. You can spend some time, invest some time in training, setup. It's best to do it when you first set up the system, but if you find the system's not working right, the worst thing you can do is let it continue. Better just draw a line in the sand and start afresh. But taking the time, spending upfront time on the training and the configuration, you reap the rewards for months, months, and years to come. Once that
And
system's,
Kira,
yeah,
oh, sorry, I
I'm
didn't
in a
mean
whole
to
flow.
interrupt you there.
You're
Yeah,
fine.
sorry. One question that I have for you is
Okay.
for business owners that are potentially on here today, how would they spot where there's time, like, you've talked about how those time lags can really cost a business money, but how can they identify if, particularly with accounts teams, it can be seen as, they go away and they do their thing, and then the end result is VAT is filed on time, payroll's done on time, they get their management accounts or they get their reporting, whatever it may be. But how do they know um, that there's potential efficiencies that could be applied there?
Well, as Christina always says, I'm a bit of a self-professed lean geek here, right? So I'm always thinking lean, and you always have to consider, even though you set up a process now, you should always consider is it the best way to do it, and things evolve with time. I think
Mm,
you've hit the nail on the head. If people are going away to do their work and come back, the chances are there's probably a lot of manual or reworks happening in there. What
okay.
you really want from a finance system is real-time information. So, if you feel like you want to see a certain type of report or check a profit, like there's a product that you want to see, is this profitable? Has it been profitable? How's it performing this month? If you can't get that almost instantly, then there's an opportunity there for realigning your process to make that real time. We do talk about it a little bit later on because there was one of the case studies touches a little bit on this about how that lag, results in bad decision making.
Yeah.
Um, so it's
And
spotting
so
things like that. And the manual sitting there, if you see someone's printing something out and highlight, like, think of things like that.
yeah, that's a really good point, Kira, because particularly if you have an internal finance person, presumably your accounts would typically be kept up to date, that they're managing and keeping on top of those transactions on a daily basis, or certainly by the end of the week. So if a business owner is coming and asking for a deep dive on a particular product line, as you said as an example, and if they're told, oh, I can get that to you by month end, then that's that sort of red flag. Whereas if they're able to say, well, look, I'll have everything updated and fully reconciled by the end of the week, I can run that for you then.
Yeah.
Then it's those sort of things that they need to look out for, right? That they
Yeah. Yeah. And even if you
that
think
might
about it,
identify.
there's always going to be adjustments and work that needs to be done at a month end, right?
Mm,
There's journals and accruals and prepayments. There's always going to be things that need to be adjusted for a month end. What we're talking about is a snapshot in time and an insight as opposed
uh-huh,
to the 100% accurate picture. You want a system that can feed you a story and an accurate story, or as close to accurate story as possible. It's not always going to be 100% there because there are adjustments that need to be done, but it needs to
right.
paint you a picture and give you an insight so that you can pivot and change if you need to. That's
Yeah.
100%. That's the red flag that you need to look for.
Okay, that's really helpful, Kira. Thanks. Sorry, I know I interrupted your flow.
No, please feel free to interrupt for sure. And if there's any questions, make sure and jump in with them.
Perfect.
So yeah, really the message that I want to get across is just simple. The bookkeeping is only ever as good as the system that's under it. Systems disconnected or poorly configured, you're always going to be fighting fires. You're always going to be having that misalignment of information. But when everything's up to date and talking to each other, the whole finance function becomes smooth, it becomes reliable. Reliable is really the word I'm looking for there, right? Right.
And efficient, right? Like it's not just reliable, but it's also efficient because you could have someone that's there reliable there every day, but if they're still relying on processes that we did 10 years ago, when now we have the adoption of AI and we have so much technology that can support automation and digitization that there's no need for there to be lags essentially, so that it's reliable and efficient, right?
Reliable and efficient, real time
Yeah.
information is what we're talking about. Yeah.
Yeah. Okay.
All right. Next topic then I wanted to move on to was around what happens when your growth outpaces your business or your bookkeeping. Um, this is really important one because growth is fantastic. It's what we want for all of our businesses. We want our businesses to grow and to be successful. But growth without that proper structure brings its own set of problems. When a business is moving really quickly, it means, more sales, more staff, more suppliers, more transactions. That creates complexity in itself. And that finance function needs to be able to keep up with that pace and really quickly.
I
First,
lost your sound there for a moment. Not sure. Sorry, Kira, if you could
um,
just repeat that just in case it happened for our
okay,
attendees
yeah,
as well. Just repeat that
yes.
last line.
The last line was just around, I'm trying to remember what I said now. It was all around, oh yeah, so whenever your growth moves really quickly about how it increases your transactions and your complexity. And if your finance function isn't built to keep up with that, then the cracks start to form really quickly.
Okay. I
All right.
appreciate that.
If that happens again, please let me know.
Will do.
Um, the first thing that we see when those cracks start to form is that compliance starts to drop. So when the volume increases, the processes don't evolve with it. You start to see things like missed VAT deadlines, inaccurate filings, errors in payroll, that kind of thing seems to happen.
Right.
None of that's happening, by the way, or generally speaking, none of that's happening because someone's not doing their job well. It tends to be because their system is just not built to keep up with the pace that the business is operating at. Now, if the bookkeeping's running weeks behind, that business is always going to be reacting to what happened instead of planning for what's coming next. Essentially, they're working and living in the past. Really difficult to make good decisions whenever the numbers you're looking at are outdated. Like you can't plan cash flow. You can't spot those issues early before they become a real issue. Can't take advantage, as we said, about the year-end planning. And information just isn't in real time. So they don't have that insight because so they can't make those plans or make those pivots. The other thing that you need to consider is if your business is coming towards a critical point, you might not even realize this is happening until it's too late without that real time insight. You might need to make a really critical business decision that pivots you away from what you're currently doing, but without the visibility. How do you time that and how do you know when that's going to happen, when it's going to land? So if you're not in the habit of regularly reviewing those financial statements, you're leaving your business at a very vulnerable position. That's the really key takeaway here. And the only way you can really review those is if the information is there and readily available, right?
Mhm.
The, the one thing that you hear a lot is, there's money in the bank. Money in the bank, so I know I'm doing well. I'm okay. There's zeros in the bank, we're doing well. But having that money in the bank doesn't necessarily mean that you're truly successful because are there other opportunities that you could use that money for? Is there a certain product that's performed particularly well? And if you spent a bit on marketing, that would perform even better or whatever. It's taking those opportunities and making the most of the finance that's there and available. Um, those insights will come from that reporting. But when those bookkeepings are up to date, when the books are up to date, the advice becomes really timely. I think that's the key thing. And but if it's behind, you're basing your decisions on outdated information. Not to say that it's not relevant, it's not accurate. It's there, it's happened, it's history, but it might not be the snapshot where you're at right now, and that's where misalignment happens. Um,
I think
Another thing
that's
we
really powerful, Kira, what you've said there, because it's not only, missed opportunities, it's the risk of making the wrong decision as well, right? If you don't have, there's equally, missed opportunity is one element, but there's a lot of businesses out there that have maybe made the wrong decision, looked at the data in one way and trusted it fully, when, as you say, if it's not up to date and you're looking at historic information. So let's say, you're in this quarter and you're looking at last quarter's, and you could make decisions for next quarter based on the information that you got from first quarter without really knowing what impact and what changes have happened in this quarter. Whereas the bookkeeping fixes that you're going to talk us through in some of those case studies would lead you to have that real life up to date information so that you're making informed decisions and planning as well as taking into account all of the accurate information, right?
Yeah, 100%. Yeah. It's having the real-time insight and, as you say, not making the wrong decision. Oh, it's just as well as making the right decision.
hmm That's it.
Yeah.
Yeah. Rather than just missing opportunities, there could be, risks to the business.
Yeah.
Yeah.
Um, I'm conscious of time, so I might scoot ahead a little bit if you don't
Sure.
mind.
Of course.
We might just get straight to the case study. So we
Yeah.
have I spent a bit of time going through some past clients that we would have had at Knorr. One of my teams, they manage the supporting businesses and digitalizing their finance function. So they support them maybe migrating from one software to another or setting up the software fresh. Like I went through the archives and pulled out two really polar opposite examples that there might be some learnings in the people that are listening today. First case study that we're going to look at is a really established business. And established businesses will probably hear a lot of themselves in this story. It was a family run business that they'd been trading for decades. Really solid business, great reputation, and loyal customer base. Really successful, pillar of the community. But the systems that they were using hadn't changed for years because they'd become very familiar and very comfortable in what they were doing. Using an old desktop software accounting package that served them very well and give them insights that they wanted and their team were comfortable with it, right? That worked for a long time, but it's outdated now at this stage. The really big challenge that they were facing was that actually they had one person that was doing everything in their finance function, had been for 30 years. They knew the business inside and out, every supplier, every customer, every employee, every little quirk of the system or little workaround that had been built in over the years. They knew it all. But all that knowledge kind of lived in their head. It wasn't documented down anywhere. There was no process. It all lived with them. And that person was actually retiring. So it wasn't just an inefficiency risk anymore. It was actually a continuity one. And a lot of businesses find themselves in a similar position where, they're relying on one or two people, two key people. We've actually heard the story, I'd say, Christine, I know how many times the prospects come in and say, oh, my bookkeeper there, whenever they go on annual leave for 2 weeks from stops.
Yeah.
Really common thing you see in established businesses. Um,
Absolutely.
but the thing that you have to ask yourself is what happens if that person walks out the door, they take on well, or what happens if something goes wrong and they're not around to fix it? What happened? How do we resolve that? And actually at Kenora, we call that the lotto factor. So if they won the
Yeah.
lottery today, they didn't come back tomorrow, how would your business cope without them? So that's the questions you need to ask yourself. Now, in this case, the business owners were really nervous about the change. Actually, they were so heavily reliant on that one resource. They were worried about, modernizing how it would affect the staff. The new system would it provide them with the same insight or feel as comfortable as the last one they were used to. And all that's completely understandable. With doing something the same way for 30 years, any change is going to feel huge.
Mhm.
So the first step we wanted to do was just to map out what they really needed, what they do, not what the systems or the reworks had given them, but what the actual step by step was. And once we understood that workflow, we could rebuild it properly. We moved them onto a cloud-based system. It automated all that repetitive work that person had been doing manually for years, and it built in really robust workflows that didn't rely on one person's memory. Everything became really visible, and everything was documented. We also, there was a lot of historical information there and data that was really rich and really important to bring forward. So we supported them with migrating some of that historical information into their system as well. So they had that comparable viewpoint. And by the time the project was done, management, they had real-time information. And that's a viewpoint they hadn't had or had never had before. They were able to have that real-time in numbers rather than having to wait on that person to run those reports. You always hear that I'm waiting for such and such to run the report for me. I'll have it by the end of the week or whatever. That was all real time for them now, and they'd never had that before. And having that new system in place meant that the handover for the retirement as well went so smooth. The systems were doing the heavy lifting, and the person was almost, they were all half out the door anyway because they were almost retired. But it was a really fluid move for them because we had a really robust system that was able to support. Um, And the one key takeaway, I guess, is that this story is a common one that we hear all the time and hear really, really often. So your business can, any business really can, and it's not to say it won't be painful, but it's possible and it's important. For this business, it wasn't just like a system change, it was a complete generational cultural shift for them. So if they can do it, anybody can do it. Right.
Absolutely. You're so right, Kira. Like it's uh, as you say, when it was that business in particular, such a dramatic change for them to move from that one person that held all of the knowledge to moving to a system where a couple of key people in the business have access, are able to run their own reports, are able to do their own analysis as well. It gives that power back to the business owner where they're able to see real life information and live information as well. Um, but as well as that, the efficiency and being able to either interchange with working with an outsourced company like Norm that are able to support you with your bookkeeping or work with a remote bookkeeper, whatever it may be, it just offers that full continuity to that business that they didn't have in the past, where they needed someone in the office, on that desktop software. There's just no comparison, right?
Yeah, and it was such a big shift, and they were right to be nervous because it was going to be completely changed, like the landscape for them
Of
entirely.
course.
Um, but they knew it had to happen, and they knew it was important for their business to survive and move forward and to digitalize.
Yeah.
Okay, I have another case study that I'll rattle through really quickly then. So this one's all about growth actually. So it's a completely different story. It was a new business. They had identified a gap in the market. They took a leap, took an opportunity, and scaled incredibly quickly. Meant more sales, more staff, more products, more complexity with all of that. All brilliant things. So real success story, but the systems didn't scale with them. What they put in place were a lot of different tools. They had a tool for selling, a tool for stock, tool for payments, tool for fulfillment, and none of these individual tools, they were all siloed. They didn't talk to each other. And every month they had the same cycle where they had to export, import, reconcile, and repeat. They had this cycle of trying to stitch together spreadsheets to get a viewpoint of what happened last month. And in a growing business like that insight's so valuable because you have to be able to pivot really quickly in a business like that and as we said, drop things that aren't working and try things that are and invest in things that are working well. So they had to try and stitch that all together at the month end. And at that stage it was historic and was probably no good to them anymore. So what they really had was growth, not visibility. Essentially, and I love this saying, flying the plane while building it, right? So that's what they were doing. And the really, really painful part whenever they spoke to us was the realization that the systems they were paying for, when they were paying for multiple different systems, they weren't getting the full value out of any of them. So they were out money, having to do rework and not having the insights that they really needed. Now, the first step that we took was that we wanted to simplify that tech stack. Fewer systems, better integrations was really the goal, what we are trying to do. We built some single source of truth where all information flowed to one place, sales, stock, cash, all in the one system. And the orders would automatically feed into the accounting software. So there's no manual export and import needed for that. So that automation kind of meant that they could grow without increasing their headcount to deal with the admin with the growth that came with the growth. Um, and then the other thing would
Hugely
be,
key for a startup, right?
yeah, because
Yeah.
it's not easier, but it's the automatic responses to put another bum in a seat to deal with the data,
Yeah.
and that's not always the right way to do it because you're just going to have to continue to do that. Um,
Yes.
they New systems meant that they had like real-time dashboards as well. So instead of having to stitch together those spreadsheets a month, then they were able to click in at any given time in the month, say this is the state of play as it stands today. So the transformation was huge, but the team, they instead of firefighting, they were now planning. So they instead of spending the time doing the rework, they were able to manipulate and understand the data and say, well, this is what it's telling me. This is the story that it's painting. So therefore, this is what my recommendation, how we move forward. Um, so yeah, the human side was a really important part because the team were exhausted, having to do the reworks and the integrations really were key there. Um, those are the two case studies. There's a couple of softwares that I can fly through really quickly, unless there's any questions, Christine, you prefer to jump to.
No questions have come through just yet. So if anyone has any questions on any of the scenarios that we've discussed, or if you want to ask anything to Kira, then do submit your questions. Go ahead, thank you, with the solutions.
Okay, Grant. So there's so many softwares out in the market. That's the one thing to point out there. And every one of them will promise to solve all your problems with their lovely bells and whistles. And to a certain extent they will. But what you have to take a beat and understand is what's important to your business. And you need to arm yourself with negotiable features in mind when you're going out to do your research. Don't get distracted by the shiny dashboards and all the promises that they have. Know what's important and stick with that. Um, Softwares, and there's loads. There's so many out there, but these are a few softwares that our clients quite that seem to get a lot of value out of. Prole is the first one. They support with VAT return filing, so they're set up specifically for that Irish market. They prepare the VAT using the real-time data. You have visibility through the month of what your liability is instead of having to wait to the end of the month, at the end of the period, and then panic because you have a massive liability. And the reports are structured in that revenue. And the way the revenue expect. So it's a nice system because not a lot of accounting systems will have that kind of Irish VAT viewpoint. Zero, for example, doesn't. So this Parola one plugs into zero and it bridges that gap. We have a couple of expense management softwares that we have clients that really like. Clio and Expensify are the two examples that we have. These tend to use apps, staff members can have an app. They go off and they do the expenses on site. If anybody's ever had to chase staff members for receipts, they'll know these are real game changers. Staff just take a photo and they choose a category or a job code, and it automatically feeds into the kind of software. Um, it just means you're avoiding all that reimbursements, big reimbursements a month end, petty cash and the like, and oh, I'll give you that receipt later, which inevitably never comes. Um,
Mhm.
it gives your team the freedom to do the expenses, but you still have that oversight or control, essentially.
Absolutely. No, Kira, I've included as well a link to Zero and the app library in particular, so people can see all of those add-ons that you've mentioned. So,
Right.
and as you rightly said, there's so many softwares out there. I know that Zero is one that we support a huge number of clients with the transition to. Obviously, our key takeaway is that you should be using a cloud solution and using a cloud solution that has plugins that can automate and digitize. And certainly looking at Zero with all of the add-ons and tech stack that you can build around it. Like in those case studies that you've mentioned, how that's transformed those businesses where they're able to scale without the need of increasing headcount. That's a huge saving for a business that's starting out in particular.
Yeah.
So hopefully that's been really helpful for all of our attendees to get a sense of everything that we that you can do with your bookkeeping. And certainly, I'd say the key takeaway is to go and assess your current setup and look at whether or not digitization it's the time for that, particularly if you're resourcing and you find that you always have delays at month end, or those key points that you've mentioned there as well, Kira, on potentially delays with payroll or errors and inconsistencies. There's a couple of triggers that you can look out for when you're assessing your business. We also have a webinar coming up on the 10th of June with Larissa Feeney, our CEO, on e-invoicing. So, what is coming, when, and what to do now will be covered on e-invoicing. So, I know that that's a key topic for any business owners at the moment. So, do you register on Kenora.com for that session as well? And we think that it'll be very helpful for all of you. Thank you so much for your time today, Kira. I'm sorry for all of our attendees for running slightly over and starting a little late. Thank you for your patience. Really appreciate that.
Thanks, everybody.
Thanks. Have a good day, everyone. Bye bye.